Peterson is the president of the Peterson Institute for International Economics, and he served as an external member of the Bank of England's Monetary Policy Committee. He joins me now from Washington. So great to have you with us. I've got so many news items I want to tackle with you, but I want to quickly first talk about the $30 billion that's come through from all these banks, coming to like coordinated action coming through from the banking sector to help First Republic. What are your thoughts?
I think it's a smart move for political as well as administrative reasons. The Federal Reserve isn't going to be able to find a buyer for First Republic or approve a merger very quickly. But also, this is consistent with the message of the actions taken so far, that the cost of alleviating the problems in the mega regionals is going to be borne by the banks who are part of the Federal Deposit Insurance Funds. So the idea that these banks, in their self-interest, are putting in money in the form of deposits that they'll get back makes sense to me.
Yeah, I love that self-interest, right? Because there's something in it for them, because they're worried about contagion. You know, Janet, yeah, I mean, totally. I mean, but Janet Yellen also says, you know, that the system will not be allowed to fail. In saying that the system will not be allowed to fail, she's basically talking about banks will not be allowed to fail to ensure that there's no spread of contagion.
I hope what she means is the system not being allowed to fail means that depositors need to run from bank to bank and need to be afraid of a sudden breakdown in payments, and that employees around the country don't need to be afraid of a sudden loss of liquidity for their paychecks. That's different from no banks allowed to fail. Banks do fail. So the point is to have an orderly workout of the banking problems. I hope she's not saying no banks will ever fail. In fact, I'm hoping and assuming, I shouldn't say hoping, I don't care, but I mean, I'm assuming that First Republic will not be an independent bank very long from now.
You know, I think a lot of this has been tied into, you know, liquidity issues at SVB. We've been looking at the higher interest rates. We've been looking at regulatory loopholes where some of the smaller banks haven't been subject to stress tests since Dodd-Frank was watered down in 2018. Do you believe that there's a confluence of issues that resulted in what we're seeing at the moment?
I do. I mean, we all should be humble, myself very much included, after 2008 about not seeing what may be underlying connections in the financial system. Nevertheless, this is a pretty clean case. When we see that it was specifically the banks that had the loophole and then the tailored, as it was called, supervision from the Federal Reserve were the ones that got into trouble, meaning it's not all the small banks, it's a specific group of large but not considered systemic banks, the 100 billion to 700 billion size, that's where the problem was. And similarly, we saw that there was no problem in the money center banks, that they survived a bunch of real world stress tests the last few years. So I do think it was a specific regulatory and supervisory mistake.
What of interest rates? What do you think the Fed should do? I don't think I've ever seen so many calls, you know, to tell the Fed, listen, you should halt. I think there were similar calls in in Europe. Christine Lagarde went ahead and hiked rates despite what we saw with Credit Suisse. Many say it was a coincidence that it sort of happened in the same week as SVB. What do you think central banks should be doing?
I think the Federal Reserve right now should be going ahead with a 25 basis point hike. I think that they should have been going ahead with that anyway. There was some overshooting in the market to think they would do 50, and now there's been undershooting in the other direction that they should pause. We have genuine inflation issues in the US. They are important to every working person. They have to be dealt with, and they will get worse if you don't deal with them. Meanwhile, we are providing, I shouldn't say we, the US government, the Federal Deposit System, the banks who will be paying for the Federal Deposit System are all providing the necessary liquidity. So you should be able to separate raising rates against inflation from providing liquidity in specific circumstances.
Thank you so much, Adam. Such a pleasure to have you on the show. Thank you, sir.